because of where we are in the financial cycle, the fiscal cycle, all financial roads lead to gold.
Welcome back to Metals and Miners. I'm its founder and its host, Gary Bohm. Today we have a fantastic discussion lined up, and we're fortunate to have with us Bill Holter. Bill was a stockbroker for 23 years and a branch manager for 12. After retiring, he turned to financial journalism and contributed for more than a decade. Bill is a precious metals expert and broker. Bill, thank you so much for joining us today.
Thanks for having me, Gary.
So let's begin with a look back on 2024. From an economic and market perspective, what surprised and shocked you? What fell right in line with expectations? And what are you expecting as we move into 2025?
I guess what I was surprised about is something did not blow up. I mean, they've swept pretty much everything under the rug, and it looks to me like it's going to be one big rug pull when it happens, and I would expect that to be in 2025. What I was not surprised about is that both gold and silver, they both rallied this year, and I think that was a function of what happened in late 2022. I think it was October or November is when the Treasury announced that they were sequestering the $300 billion of Russian treasuries. If you look at a chart, the following day is when gold and silver started to move. And actually, an add-on to that story, just today's Thursday, I guess it was on Tuesday, the Treasury sent $20 billion to the World Bank to send to Ukraine, and those funds were created by taking $50 billion of Russian treasuries and using them as collateral. That is such a big no-no it's disastrous. And to make matters worse, they did it ceremoniously. Janet Yellen and other Treasury officials sat around a laptop when they pressed the enter button and they sent the money and did a photo op. I just think that is an absolute outright disaster.
Yeah. So I do have a question regarding the money going into Ukraine. But before we go there, what are you expecting as we move into 2025? The market's been on an absolute tear. I believe gold and the market, the S&P, went up more than 30% for the first time in decades. It hasn't happened like that in decades. What are you expecting as we move into 2025?
I think 2025 will be the year that something breaks. I think derivatives are going to blow up. I think it's game over. The average person, we'll say the average person on the right, believes that Trump is going to come in and fix everything. It's not fixable. It's mathematically not fixable. This year we're going to pay $1.5 trillion in interest alone. The debt is now $36 trillion. It only took 4 months for another trillion to be added on. The month of October and November, I think the number was something like a $600+ billion deficit. I think 2025 is going to be the year that something blows up, it spreads, markets collapse, and ultimately will be closed. I think we will have a closure of markets worldwide at some point, and that will usher in the first of, I think, at least 2 resets.
When you say reset, can you get into that a little bit?
Prices are skewed right now. If you look at the price of labor, you look at the price of capital, you look at the price of commodities, they're malpriced. They're not priced right. Just look at silver versus gold, 85 to 1. That's way wrong. Look at interest rates. How is it possible that the United States pays the interest rates that is currently paying with the risk of default, and default being defined as either non-payment or just printing the money and debasing the dollar to pay it? Um, so I think, and I mean, look at the stock market. Stock markets are at levels not seen before on valuation levels. So I think there's going to be a reset, and prices. When I say reset, I'm talking about pricing.
Okay. All right, I appreciate that explanation. So, Bill, you were talking about Ukraine a moment ago, on top, and the money that the United States has given, on top of the hundreds of billions to help fund the war in Ukraine that the U.S. has already given. The U.S. just recently transferred a $20 billion loan to Ukraine backed by Russian assets. What does this tell the rest of the world, and what are the implications of that?
Well, think about how messed up that is. They took 50 billion of Russian treasuries to use as collateral to take out a $20 billion loan to give to the Ukraine. So if you're Vladimir Putin, they just stole 50 billion of your money, and they gave 20 billion to your opponent to fight you. I mean, that is so bad. And they did that right after what, a week or 2 weeks after the display of the Oreshnik missile, which cannot be stopped. The West has there are no weapons anywhere in the West that can keep up with that. And if you can't catch it, you can't kill it. I mean, they can hit London from Moscow within 20 minutes. I mean, that's how fast these things are. So from that standpoint, that's an absolute disaster. From a broader standpoint, what about all these other countries in the rest of the world who just watched that happen, that have treasury balances? They've got to be thinking, well, hell, if they could do it to Russia, they sure as hell could do it to us.
That's a great point. All right, so we're watching geopolitical destabilization happening everywhere. It seems to be the plan. France's government is collapsing. Germany's government is collapsing. South Korea's government is collapsing. Georgia's government is collapsing. Syria's government has already collapsed. And yesterday, one of the New Jersey congressmen announced on a live interview that the random drones that have been seen, you saw this, right? That have been seen over New Jersey, they're from Iran, and that Iran has planted a mothership off the East Coast to control the drones. It looks like the next country to be destabilized is Iran. My question is all of this so is all of this geopolitical destabilization coincidence? And in your view, what is coming next once this destabilization plan is complete?
Okay, we've got two separate topics here. First, when you say, you're talking about France, you're talking about Germany, you're talking about the West, you're talking about NATO countries. What's happening is populism is taking over. I mean, think about in the United States, the wokeness that was trying to take over. The people pushed back. So you've got in the United States, populism won, globalism lost. France the same, Germany the same. So that's a populism issue. Now, as far as you're talking about Iran and supposedly a mothership off the coast. Well, first off, and I posted this last night with a comment something like, how is this even possible that there's a mothership off the coast? And if it is true, which I don't believe it's true, but if it is true, why is that boat still even floating? I mean, there's no way it would still be floating. So I think that story is complete bullshit. But what it does is it's planting seeds in the minds of the American public. Oh, Iran is bad. And Iran is the last of the 7 countries. If you go back to 2002, 2003, after 9/11. But to be clear, all of this was thought up before 9/11, and that's what 9/11 was all about. They wanted to destabilize 7 countries, and Iran will be the 7th. So I think this senator or congressman or whatever saying that, it's Iran's doing this, is softening the public up, softening any resistance to attacking Iran. I think Iran is the next takedown. How is it possible that you could have helicopters that have flown and been looking down on these things? Why don't we have Apache helicopters taking them down? Why don't we have, F-16s shooting them out of the air? What's the deal? This is not, it didn't just happen last night. This has been every night for the last 2 weeks or 3 weeks. What the hell's going on? Why are we even paying taxes if you can have drones flying over your house and the authorities say, throw their hands up in the air? We have no idea what's going on. I mean, this is something really wrong.
I'm with you on the on the purpose behind the congressman coming out and saying what he said, and they're letting it go on and being like, I don't know, in order to shift the focus in that direction. But ultimately, what's the destabilization plan about here? Do you tie this to the currency? Do you tie this to something different? What do you see as the reason behind this wide scale destabilization plan?
Well, it was the plan back in 2003, and Iran is the last of the 7 nations. Syria was number 6. I mean, you had what? You had Yemen. I mean, there's a list. You could go back and look at it. There was 7 nations. Syria and Iran are the last 2. Syria just fell, and Iran is next, and it's last. The idea is to not let them. I think the idea is to not let them peacefully or easily coexist with each other and do deals with each other, and thus turn and say, oh, well, we're shipping oil here or we're not shipping oil or whatever. I mean, it's all about oil.
Okay. All right. So let's shift our focus here to the Doge group that's looking to cost cut. Bill, Elon and Vivek, they're leading the government cost cutting team called Doge. You recently wrote the following: let's agree that Doge can cut $2 trillion in spending. If they did this, GDP would be negative every year. $2 trillion is close to 7% of the $29 trillion economy. If it doesn't get borrowed and spent, then it doesn't make its way into the real economy, and even the BLS could not jack with the numbers enough to spin positive. Not to mention the ripple effects of $2 trillion not entering the real economy each year. Would you speak into what you wrote here and what you would expect to see happen as the result of them actually being successful in cutting the desired $2 trillion?
Okay. I mean, just exactly what I wrote there. If $2 trillion gets cut out of the budget, that's $2 trillion that does not get spent. And you would definitely you would feel the effects of $2 trillion not making it into the economy. I mean, it's simple. The economy would be shrinking by 6 or 7% per year. And I mean, what's the definition of a depression? A negative 10%. And this would be year after year after year, because once you cut an agency or whatever, it's not going to come back. So they don't spend it this year, they don't spend it next year, they don't spend it the year after that. Not to mention, when I said ripple effects, not to mention the unemployment. And when I say unemployment, that includes these people stop and get coffee on their way to work. These people buy houses. These people, they live, and in life you spend money and you do things. So that's $2 trillion that's not going into the economy. It's like it's almost like cutting the money supply. I mean, it's the same effect.
Yeah. So you see, if they're successful, you see the U.S. on a path towards a depression, but you don't think so you don't see them actually going down that path. You think it may be on the margins, tens of billions here.
I do. I think
they
will
do see it.
I think they're not going to get to 2 trillion. There's no way. But I mean, they could do 300 billion, 700 billion. I'm not sure they could get to $1 trillion, but whatever they get to, yeah, I think they're going to go through and they're going to try to cut waste. And there's a shitload of waste. I mean,
Of
just
course.
look at some of the monies that are spent on various uh, stupid plans. I mean, the mating effects of fleas on monkeys. I mean, they're just
Right.
ridiculous stuff. Money is spent,
Right.
and that money's got to get cut. But that money ended up in someone's pocket, and they spent
Yeah.
that money.
So
So
even a fraction of the 2 trillion being
you'll
cut, like
feel it.
let's say 300 billion, 500,
Yep,
the economy's still going to feel that.
absolutely, sure. And
Yeah.
like I said, BLS
All
is
right.
not going to be able to lie about it.
Yeah. All right, let's shift over to the market. Bill, since the fourth quarter of 2022, total US stock market capitalization has increased by 22 trillion dollars from 40 trillion to 62 trillion. Has there been market intervention here or true price discovery during this time? And if it's been intervention, what does this look like when there's true price discovery?
Well, no, there is not price discovery. There's no price discovery anywhere because all markets are rigged, and they're rigged with derivatives. They're rigged with basically instruments that you can put a penny down and and be able to control a dollar. So if you want the price higher, you put a penny up and you buy a dollar's worth. If you want the price lower, you put a penny up, you sell a dollar's worth, and the price is lower. So no, there is no market discovery. Uh, and I would just say that basically going from 40 trillion to 22 trillion, I mean 62 trillion, I mean you're looking at that's over 2 times GDP. It's We've never been to these valuation levels. I mean, price to book, price to earnings, dividend yield, you name it. Any of the traditional valuation measures are gone. And I mean, if you even want to think about Bitcoin. Bitcoin went from what 17,000 to 100,000 in a year. Uh, and we're told that we should believe that Bitcoin is money. Bitcoin's not money. I mean, I'm sure your comment section is going to blow me up. I'm a dinosaur, blah blah blah. But in my opinion, Bitcoin is like the NFTs. Basically, Bitcoin is digital air. It's nothing. It is a perfect accounting. The blockchain is a perfect accounting, but Bitcoin, the other digital currencies, they are nothing. So it's a perfect accounting of trillions of nothings.
All right, so this is a good segue here. After years of QE, excess liquidity, and rampant speculation in the markets, is some kind of painful market cycle purging necessary to get back to fiscal health? And if so, to what degree of pain would you expect to see that would be necessary to bring some equilibrium and price discovery back to the markets?
Well, first off, understand why we had QE. We had QE because the financial markets and thus the real economy, because if markets get wiped out, the real economy will definitely turn negative. Uh, but the financial markets uh, were held up with QE stands for quantitative easing, but the E it should be QEE. The word emergency should be in there because that's where QE came from originally. Was because markets looked like they were going to turn around and collapse, and we lived basically from 2008 until what 2022 or 23 when it first started raising rates. uh, QE was to support a financial system that could not stand on its own. So just understand that QE, uh, we wouldn't have gotten here without QE. Now you're talking about a market turn down. We really, I don't think we can have a 15 or 20% market uh, correction without everything, without markets actually closing, because that's going to hurt enough derivative positions that go belly up. And once that happens, the problem with that is if the losers lose so big that they're wiped out, then the winners lose too because they don't get paid. That's the danger. And you're talking about the numbers probably over $2 quadrillion worth of derivatives. So you're asking me about a market turndown and how severe uh, does it need to be. What I'm telling you is kind of the opposite. It can't be more than 15 or 20% because if it is, then you wipe out derivative positions. You've got people going upside down, and you'll have a market melt down to the point where the only way to stop it is to pull the plug out of the wall.
Amazing. Okay. All right. Let's turn to the Fed here. Global central banks, Bill, have conducted 65 rate cuts over the last 3 months, the most since the 2020 pandemic. That includes yesterday when Canada cut 50 basis points, and today when the European Central Bank cut 25 and the Swiss National Bank cut 50, leaving their interest rate literally 50 basis points away from the zero bound. This is the fourth fastest pace of rate cuts this century. To put this into perspective, during the peak of the great financial crisis in 2009, global central banks implemented 76 rate reductions versus the 65 today. Still to come is the Fed, likely cutting rates again, bringing the total to 66 global central bank rate cuts over the last 3 or so months. Central banks are calling for a soft landing while cutting rates like we're in a global recession. Why are they cutting so much if the global economy is so strong? And aren't these cuts and monetary easing inflationary for 2025? Is that what you're expecting to see? More inflation?
Well, that before you said that last sentence, that was going to be my answer. My answer was going to be why. Why? Why are we seeing all these rate cuts if everything's so good? I mean, we've got strong growth, low inflation, blah blah blah. What we're told is all bullshit, and they understand that this thing's turning down, and I think they need to be seen as uh, easing going into 2025 because, like I said, I think they're going to pull the rug in 2025, and I think central banks will say, "Well, we tried."
Okay. So staying on the central bank theme, they've bought 60 tons of gold in October. That's the largest monthly net purchase so far in 2024. Meanwhile, China has resumed gold purchases, in
They always love.
November after a 6-month pause. The only thing they paused was what they were sharing. But this
Right.
year alone, India and Turkey, they've purchased more than 70 tons of gold each. Central banks have now purchased almost 700 tons of gold year to date, comparable to levels seen in 2022. Why are central banks buying so much gold, especially if it's an old relic that won't be used in the future financial system?
Again, you did it again with your last sentence. My question was going to be, or my answer was going to be why. Why are these central banks buying all this gold? Uh, I think you've got to go back to the October of 2022 that we talked about earlier, when the 300 billion of Russian treasuries were sequestered. These central banks understand. They understand two things. They understand the mathematics of the fiscal situation of the U.S., which is the issuer of the world's reserve currency that they hold on their books as reserves. They understand that there's a super high probability. I'm not going to say risk, super high probability of a massive devaluation in the dollar, which is going to leave a hole in their balance sheets. So they've looked for something, what can we do to offset, if we're going to lose on the dollars, what can we do to gain? Well, gold is obvious. Uh, the other thing is they're looking at, well, if they can do this to Russia, then the U.S. can just cancel out our reserves. So, I mean, I think those are the two obvious reasons you've got central bank buying.
Are you expecting to see? Let me say that. All right, Bill, former Fed Chair Alan Greenspan said the following: "I view gold as the primary global currency. It is the only currency, along with silver, that does not require counterparty signature or a liability for someone else." That's what he said publicly. So, gold as a currency, it's been suppressed for a long, long time. Recently, central banks, as we just discussed, they're buying gold in record amounts. Is gold as a currency and possibly even a rival to the dollar trying to make a comeback? And if so, do you believe it's going to be successful?
Uh, yes and no. It's trying to make a comeback, I think, in people's minds. I don't. I absolutely believe that gold is going to be. It's going to back currencies on a ratio basis. I don't think gold will ever become. I don't think any currency anywhere on the planet will ever become directly convertible to gold. And the reason being, central banks have seen it time and time again. When their currency is convertible, it converts. People present the currency and they say, "I want the gold." So I don't think the convertibility aspect will ever happen. Uh, and other than in a complete system down scenario where we're in barter, where you would use gold to purchase big items, you would use silver to survive with. I don't think gold is going to transact as currency, but I do believe it will back currencies again on a ratio basis as opposed to convertibility basis.
So we're starting to see the framework for that emerge in Europe, as many of the European nations are trying to get to 4% of GDP in terms of gold holdings. Have you seen that?
Yeah, and that's at current prices, it's nowhere near enough. But who knows what the pricing is going to end up being. But I would
Yeah.
say that you're seeing it definitely with the BRICS talking about backing the unit with anywhere from 20 to 40% gold.
Yeah. All right. So staying on the theme here, we talked about how China the other day said it's going to loosen fiscal policy for the first time since the 2008 great financial crisis. Right
Who
after
said
they
this?
announced that China,
China. Okay. Yep.
yeah, China announced the other day that it was going to loosen fiscal policy in their country for the first time since 2008. And immediately gold, silver, and the miners followed and they soared. Do you
Right.
see what China? Yeah, do you see China loosening their fiscal policy in conjunction with all the other central banks around the world? Is this the launch pad that many have been waiting for the precious metals and the miners to truly take off?
What China is doing, I mean, if you see what's going on in China, I mean, they have a serious debt problem, and they have a serious real estate problem, and they obviously see it happening, and they're looking at their own, 2008, 2009, and I think it just goes back to what Richard Russell always said. It's in this system, it's either inflate or die. And I think this is the path that China has chosen to inflate. So yes, I mean it is the launch pad. I mean we've seen good action in gold. We've seen good action, not quite as good as gold, but I think ultimately it'll be better than gold in silver. And we've seen positive action in the miners. Uh, but I would say where we are right now, because of what China is doing, you've got the rest of the world cutting rates. It is the launch pad. I guess to
Okay.
sum it up is because of what's happening, because of where we are in the Ponzi cycle of, if you want to call it central banking, because of where we are in the financial cycle, the fiscal cycle, all financial roads lead to gold.
So, Bill, for the mining complex, how much of a holdback has the climate change and ESG movements been? And with their dismantling in a Trump 2.0 administration, plus the cuts to very onerous regulations, how much of a potential headwind can those be for the miners?
Well, that's a really good question, and they have been a headwind. And I know some people who have looked at mining companies that have an actual ESG page or whatever on their website, and they're like, piss on them. I'm not investing in them. It may be a great project, but I'm not going to do it because I don't believe in any of this, and I'm not going to put my money into a company that practices, woke, ESG stuff. Uh, so it has been a headwind. And one thing for sure, and earlier I said there's no way Trump can fix this. No, he cannot fix it. But I absolutely believe he's gonna do like he did the first time around and reduce the horrendous amount of regulations in so many different industries and make it easier to do business. And that will that'll make efficiency much better. It'll definitely take some pressure off of inflation, but it cannot fix the elephant in the room that we live in a banana republic from a fiscal standpoint, and judicial standpoint in many places.
This has been a fantastic conversation. Before we wrap up here and I ask Bill the final question, I want to point everyone over to our Substack. It is free. Go to metalsandminers.substack.com. We post free content on the consumer economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews that we conduct, just like this one. They are all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, If You Don't Own Gold, You Know Neither History nor Economics. This free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us. Also, I'm positive that you've enjoyed the conversation with Bill as much as I have. Please let him know. Hit that like and subscribe button and leave a comment below the video. All right, it's now time for the Golden Nugget segment. Bill, let's discuss a future scenario that I've been asking several of my guests lately. Picture a dinner party, Christmas 2029, with two tables. One table is very happy. The other is sad. They're happy and sad because of what they invested in right now, 2024 and early 2025. What do these two tables represent to you in terms of asset classes?
Well, it's tangibles versus the financialized assets, and I think that the happy table is going to be pretty sparse. I mean, let's say that there's 100 people in the room total. You might have 3 or 4 people at that table. And of the 3 or 4 people, only one bought gold or silver or had gold or silver. The people who are buying gold and silver now will essentially end up, once this thing, once it burns to the ground, the people who own gold and silver will be literally individual banks because they'll be the only ones who have money. Because money is going to burn. Currencies all across the globe are all fiat, which means they're all debt-based. And I've been on the record for probably 15 years now that the ending of this whole scenario would be a credit/currency crisis. It would start with credit and currencies would collapse because they're currency backed or they're debt backed. I believe that the credit markets are going to seize up, and when they seize up, nothing will work. I mean, we won't be able to do this interview. There won't be whatever platform you're using. The electricity will be spotty. Water will be spotty. Food in grocery stores will be non-existent. And I say that because how does food get to the store? Look at a loaf of bread. How many uses of credit does a loaf of bread have? Well, more than a dozen uses of credit for one loaf of bread. You've got the silos. You got the farmers, the truckers to the silo truckers again to the production facilities, and then truckers again to your local grocer. None of that's going to work if there's no credit. So that other table, there's not going to be any food on it. Now, by 2029, I would expect things to have started to reboot, and I'm not exactly sure what the system's going to look like. But sometime between now and 2029, that table is going to be empty, and procurement of food is going to be number one on everyone's list every day.
What an interesting picture you just painted. All right,
But
Bill,
it's all
thank you
about
for
credit.
coming on.
That's why. It's all about
I
credit.
understand.
That's
Yeah.
why. People say, "Oh, you're a doom and gloomer." All I do is talk doom porn. No, this is pure logic. It's pure math, and credit is going to break. I can't tell you when exactly. I do believe it will be this year, coming year. But once credit does break, your lifestyle, the way everything you've come to know and love is done.
I understand, and I understand your thesis here very well. So, but Bill, thank you for coming on to Metals and Miners and for being so generous with your time, analysis, and ideas. It's been fantastic to spend the time with you. Would you share with the viewers any important message you want to leave with those tuning in, where they can learn more about your work, and
Sure.
how they can connect with you?
Yeah, I guess my message, and I've been doing this now for probably 6 months or a year. My message is just, if you can see this coming, and you've been preparing or you're just starting to prepare, just do the best you can. That's the best you can do. You're definitely going to forget some stuff. Don't beat yourself up, because the best you can do is the best you can do. If you do want to read my work, you can go to, it's simply billholter.com. There is a contact button there. As you mentioned, I'm a precious metals broker. If you want to contact me regarding gold or silver, my business email is bholter@proton.me.
I will have all of that information up there right here in the video for everybody to see. It'll be in the description area for everyone to click through and go to these different spots. I've been following you, Bill, for a couple of years now, and I really appreciate your perspective on things from geopolitics to the Fed to the markets. So thank you for coming on, and I look forward to having you back on sometime soon. Everybody else, thank you for watching.
Thank you, Gary.
I want to point everyone over to our Substack. It is free. Go to metalsandminers.substack.com. We post free content on the consumer economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews that we conduct, just like this one. They are all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, "If You Don't Own Gold, You Know Neither History nor Economics." This free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us.